Hello, everyone, and welcome to Bitcoin Treasuries World number 52. Today with Smarter Webley Wednesday, one of my favorites. I'm here with a special guest, the head of Bitcoin strategy, Jesse Myers, probably director of Bitcoin strategy. But here we are, Jesse. How are you, man?
Yeah, technically head of Bitcoin strategy. That may change. We'll see.
We'll see. Yeah, it's always good when you have the opportunity to go somewhere, prove yourself, and then titles can be. I mean, they're not important, but then they can be upgraded. It's a pat on the back, and I know you're killing it at SWC. So happy to be watching here from the sidelines. So Jesse, a lot has been going on since last. The whole Treasuries world has been in sentiment downgrade. Like, sentiment has been really bad. Personally, I think the bottom's in. But what I find really interesting and what I want to talk with you about today is the different tools available, because we can now see we are no longer in a situation where mNAV is just going to permanently stay above 1.5, above 2, and the ATM is like the only thing we have to talk about. So why don't we discuss the current situation where current fully diluted, everything counted mNAV is 1.06. What's your thoughts, and what do you want to share with us?
Yeah, I mean, you got a lot in there, and I agree. I think that in the spring, anybody who said they were a Bitcoin treasury company commanded a premium just by saying that you were going to do this. And there are a lot of Bitcoin treasury companies in the world, right? Like 200 or something. And very few have a track record of delivering Bitcoin yield, right? And by that, I mean, like, there's a lot of pipe deals, for example, where the premise was, let's raise a bunch of money, buy a bunch of Bitcoin, and we'll trade at a premium because everybody's trading at a premium. Who does this? And that premium is not justified. It's not earned. We like to say, Andrew likes to say, you have to earn your mNAV premium. And our view is that an mNAV premium is warranted if there's a track record of delivering Bitcoin yield. Like, what are you willing to pay for an asset that grows your Bitcoin by 20% a year, let's say, right? Like, I don't know, it maybe 1.2% or 1.2x, or maybe for you it's 1.5x. Maybe you don't discount those future the future by much, and you care about all of the next 10 years, and that all adds up, and you're willing to pay 4x. All of those are reasonable views, but 1x is the outlier there. Like, if you're only willing to pay 1x for that kind of asset, that doesn't actually really make sense. But in that is the assumption that there is a track record of delivering that, such that you have a confidence that into the future, a continuation of performance will happen. That's what an investor is that's their internal calculus for what they're willing to pay. And so I think that, the last 4 months has been a brutal sector-wide reckoning of, wait a second, not all of these things are equal, right? And then you have pipe deals that are designed to benefit the funds who get in at a discount at the expense of retail. Sorry.
That was a fantastic mute you just did there, Jesse. Like, I was expecting to, get that in my headset, and I've
done a few live streams before, so we roll with it.
You're such a
Yeah.
professional.
So, I that's the reality, right? Like sector wide. Wait a second, why are we paying a premium for all these assets? These pipe deals, they're designed to give a discount to funds, and then the funds, collect their discount and walk away. And that's what we're seeing play out, unfold, unwind, really. And then so I'm being mean to pipes because they deserve it. But there's also Bitcoin treasury companies who said they were going to do this and never got the machinery going, right? Never built a track record of execution, and they don't deserve a premium either. And that's between those two. That's the vast majority of Bitcoin treasury companies. Now, what obviously I'm going to get to is that I think the market is lumping all Bitcoin treasury companies together and saying that none of them are worth any premium. But if you have a track record of delivering, Bitcoin yield, of growing Bitcoin per share, as we've already talked about, that in my view is worth paying more than 1x for, if you have that belief, that confidence that performance, the execution will continue into the future.
Yeah. So what I will say or add to your what you're saying there, that a track record is needed to get a premium. So obviously, I'm a little biased here as advisor at Orange, but my thinking is, if the setup, itself that a company is in is warrants, in my opinion, like it tells you that, okay, the mechanics here, this market, the tools available, warrants a premium. Like, for instance, they're the only ones with currently a functioning ATM in Brazil, which is hugely important. Then to me, that would warrant a premium. But if we go look at the American market, my thoughts have been for months that no one is yielding in US, right? Well, strategy is yielding. It's just they're so big that currently it's not so much. Probably that's going to kick in with S&P 500 inclusion, just like it did with QQQ inclusion. But I mean, overall, yes, launching a treasury company and expecting to have an mNAV, and then the market just takes care of you hitting the ATM and you're generating yield.
Yeah, I agree. And fair point on like Orange and any other new Bitcoin treasury company. There's a window where you have a thesis that's unproven, but it may work really well, and that can that can right there justify a premium for those who are optimistic about the execution of that team and that strategy. And again, like one of the really important things that I think is bearing out is, my view has always been, and at Smarter Web we've always felt, that there will be a leading Bitcoin treasury company in every capital market in the world. And you want to be that, right? You want to be that leader in a capital market, because the end game for this is to be synonymous in a particular capital market with how you get Bitcoin yield, with how you, with your Bitcoin, get risk capital exposure to a strategy and machine that compounds Bitcoin ownership over time, right? Like that's the whole point here. And you want to be synonymous with that in a particular capital market, in large part because you know that there's going to be a name in every capital market. There's going to be a balance sheet that's the most creditworthy, that can tap into fiat fixed income markets and get the best terms to raise capital, buy Bitcoin, generate Bitcoin yield for investors. So it's there's economies of scale. There's a huge advantage to being the the leading balance sheet, Bitcoin balance sheet, the best capitalized Bitcoin business in a particular capital market. And that's reality. And we're in the early innings of that playing out in every, globally. Obviously, Strategy has that locked up in the US, Metaplanet well on their way, virtually locked up in Japan. SmarterWeb is the leader in the UK by a lot. I think like a 10x lead in terms of Bitcoin held against the next closest peer in the UK. And we see a path to continue on that and maintain that lead and grow it into the future.
Absolutely, I agree with everything you say. And what I love about SWC is that, I mean, yeah, you have a 10x compared to number two. I believe it was you, I'm very sure, that coined the phrase "winner takes most." Not that it's like a globally known thing or anything, but I think it has some key points to it.
Yeah.
You want to say something?
Well, I don't know. I can't actually remember if I coined it. I did. Okay. I got it from somewhere, and I don't remember if it was Bitcoin Treasury land or if it was somewhere else. And I, thought, oh, that's a good descriptor.
Let's just say you saw it on one of my shows. No. But the first time I heard it was you saying it, and I absolutely completely agree. And I think within that phrase is that expectation that whoever is the leader will have a higher BTC yield because it comes with advantages and credibility and credit worthiness, and when you're doing new products like prefs, etc. So I think it's
I think prefs is kind of like that's where everybody's trying to get to, and it's super important to keep in mind like what that looks like. First of all, you need to have a big enough balance sheet that anybody will lend you capital under the terms of this brand new structure of preferred equity instruments that Strategy has pioneered. So that's a big hurdle right there, right? But obviously, then you need to be offering them a rate that is attractive enough for them to say yes to that. And the better your balance sheet, the lower risk you are to them, and the lower rate you can offer, right? And Strategy is offering 8-10%, so call it 10%, and if you have a 1/10 the balance sheet, that would be 60,000 Bitcoin. That's a ton of Bitcoin. What's your rate that you're able to offer? It's less attractive than you are less attractive than Strategy, so you have to offer better terms than Strategy. Of course, this is then influenced by each capital market has their own prevailing interest rate regime. For example, in Japan, they get like 50 bips. That's kind of the standard. So if you offer 5% interest rates, that's way better, right? So it gets impacted by that. But creditworthiness of the Bitcoin Treasury company matters a ton. So you can see a world where like the winner take most Bitcoin Treasury company in the UK, for example, might be able to do preferred equities at a 10% rate, and the number two might only be able to do it at 13-15%, right? And then your cost of capital is that much higher, and that comes straight out of the Bitcoin yield that you're able to generate for your shareholders. So the higher the cost of capital, the lower the Bitcoin yield in a preferred equity instrument setup. And so obviously you want to have as low of a cost of capital as possible. And the way to do that is to be the trusted preferred name that's synonymous with digital credit in that capital market.
Absolutely. And as soon as you have that kind of understanding among investors and in the market, people would probably tend to say, well, I want to be with the leader in the market because they can borrow 1% cheaper. And then that becomes kind of a further, not self-fulfilling prophecy, but it definitely reinforces this winner takes most attitude. And also in that, further to that aspect is we know that strategy will get an improved credit rating if they're included when they're included in S&P 500. As I understand it, that will rub off on their fixed income products, the preferred stocks, Strive, Strike, Stretch, and Stride. I remember it all for still. And that will, I think, be also very, very important for that winner takes most. And to tie that back into SWC, which we're here to discuss, you being 10x number 2 right now in the market also means it is financially and just rationally more likely that you guys will uplist to London Stock Exchange sooner, which will, I guess, because I understand from things Andrew have said on the channel earlier, that will unlock some institutional capital, which means you will be the first to unlock that institutional capital. Further, getting into FTSE 250, which I think, as I understand, is a relatively not too far in the future. It could even happen with LSE uplisting. And then there's the FTSE 100 later, once you get big enough. Does the UK market, just like we in US expect the credit rating of strategy to improve with S&P 500, will that have an effect on your credit worthiness or credit rating in UK with LSE and FTSE 250?
Yeah, interesting. So I guess there's sort of two questions I could answer in there. First of all, if you're referring to like what strategy is doing, they're blazing the trail and teaching the global market about these preferred equity instruments. And when they get credit ratings, that'll be a milestone moment for this model, and then that'll become the global precedent for everybody else to point to say like, look, these are legit, and it'll make it that much quicker for Smarter Web if and when we get to that scale where we're launching those types of instruments for the market to understand and be interested. So that everything that strategy has done, everything that they've done has pioneered everything in this model, and everybody else benefits if you can execute on that playbook. So there's that side. I guess like another possible question in there was like, does being in the FTSE 250 or FTSE 100 inherently help your creditworthiness as a company? I suppose probably part of the subjective assessment of quality of a company, and because that comes with very real capital flows over time, just by being in those indices. I did some back of the envelope math of, to try to size the scale of, capital flows upon FTSE 250 inclusion. The bottom end of the FTSE 250 is about 420 million pound market cap. And when you reach that size and are included in FTSE 250, that comes with 30 to 50 million pounds roughly of capital inflows, as you're included in the index.
30 to 50 million pounds?
30 to 50 million pounds, that around that event. So it's not like on the day, but, there'd be a tail. And then quantifying beyond that, which is kind of even more compelling to me, every 100 million pounds of market cap you gain from that point forward, there's quarterly rebalancing for FTSE 250 and 100. And every 100 million pound market cap you gain results in 12 million pounds of additional inflows from the rebalancing when that happens on a quarterly basis. So, that's the scale of, what would happen. when you get into the FTSE 250. And then on top of that, there's a much smaller amount of just, annual inflows, even if you're not growing. So if you just stay the same market cap in FTSE 250, much smaller, like £1 million a year kind of thing. But the big exciting part of it is the sort of tailwind that is added to, all the other tailwinds that SmarterWeb has as a business once you reach that threshold. And right now our market cap is roughly half of that threshold, and we're not on the London Stock Exchange, which is another requirement. But we hope to be included in the FTSE 250 hopefully within a year of IPO, which would be a pretty remarkable achievement. I think unprecedented achievement in the UK as well.
Most likely, yeah. I guess. So, okay, so it may not be a direct credit rating thing. It might not be how it works in UK, but it would just, at least it would be an indirect improvement of the credit rating and the viability of SWC in the market.
Yeah. Yes. The overall robustness of the company, and it would matter in terms of the sort of subjective elements that no doubt go into credit ratings. There's objective elements and there's subjective elements, and it wouldn't hurt to be in the FTSE.
Yeah. So I want to tie back into something you said earlier. We spoke. You were talking about with strategy, and then this MetaPlanet, and we know they're about to launch preferreds in Japan. And the different sizes. They're already at 30,000 Bitcoin. You are at 2,660.
Yes.
And so I just want to say, from the way I look at it, and that's why I have said that I see SWC as potentially probably the best risk reward in this space. As you have said yourself earlier, SWC is earlier in the journey than MetaPlanet, and I don't really see any threats to SWC reaching that. Of course, nothing is guaranteed in investing, but the upside, Japan can probably support a certain size treasury company, UK as well, Brazil, US, Sweden, etc., France, Europe. But from where you are now, that upside is just significantly.
I've actually never thought about it that way, but it's a really good point that it's not, Japan as a capital market is not 10 times bigger than the UK. And since MetaPlanet is 10 times bigger than SmarterWeb at the moment, that factors in, right? I think Japan is probably a slightly bigger capital market and has a slightly greater need for yield. Japan's the best jurisdiction in the world to have done this model, and I think that's probably why it was the first place that had a sort of pure play, start from scratch Bitcoin treasury company. But the UK is not far behind, and frankly, that's a big part of why I joined SmarterWeb. Is I'm friends with Dylan. I've talked to him along his journey, and he kind of convinced me that this is going to happen everywhere. And he's right, I think. And, then it's about pattern recognition of where can this happen again? Where's the next MetaPlanet, right? Really? If you really think about it, that's what I think most investors, whether or not they explicitly or implicitly see it this way, everybody's looking for the next MetaPlanet, right? Because MetaPlanet was the best performing public equity in the world in 2024. Everyone's looking for the next MetaPlanet. And in terms of your expected value outcome, I think SmarterWeb has a higher probability of that kind of story and trajectory into the future than any other Bitcoin treasury company out there.
Yeah. So it is actually, it's very much how I look at it when I look at investments in this space, because SWC might be it is one step out on the risk curve from
Yes.
Metaplanet. But again, as I have said before, I don't really see where,
Yeah.
significant risks,
And
for this.
yeah, and
Go ahead.
I'll add something there too. Like, so obviously, I think strategies capacity to continue delivering Bitcoin yield is, the probability of that is unmatched in the world, right? Metaplanets is probably second. Their likelihood of delivering Bitcoin yield into the future very high. Smarter Webs is a little bit lower than that because there is more risk, because we're earlier, but I think very, very high. And I think that the thing I wanted to add there that I think most retail investors aren't thinking about enough is, in my view, the really important thing to look for is the degree of liquidity for a Bitcoin treasury company. Actually, Christina had a great phrase: "Liquidity is the lifeblood," which is quite good. I think that's very true for a Bitcoin treasury company. It's all about volume traded. It's our average daily volume is a super important metric, I think, because, especially with an ATM style instrument, like that's part of how you're raising capital. And there's quite a filter there that I think retail investors aren't aware of. We get the reports every day about, traded volume in the UK. Our traded volumes averages, depending on what time frame you're looking at, like 3 to 5 million pounds a day, which is pretty darn good. It's actually not, it's not like Metaplanet, but it's way better than other smaller Bitcoin treasury companies. One of the other well-known names in the UK traded 7,000 pounds yesterday. So
It's
not millions, 7,000 pounds.
Who made that purchase?
Yeah, really, that was probably one purchase, and I think that's the lens that retail is not seeing or not thinking about. Is like, that I think is an indicator, a de-risking. Like, if you get a sufficient amount of average daily volume, that means there's a sufficient amount of excitement, buzz, awareness, belief. There's a cohort of investors who have conviction in that company, in that management team, in the strategy ahead, in the path ahead, and that all adds up to daily volume. And daily volume is what you need in order to not only fundraise with an ATM style instrument, but also fundraise with institutions, because they need to know that if they want to exit that position, there's enough volume that they can get out in, over 5 or 10 days, depending on, it's kind of the typical things you hear is that they need to be able to get fully out of their position in 10 days, without selling more than X percent of average daily volume every day. And that's a non-starter if those conditions aren't there for them. So you can't raise capital with institutions unless you have already reached that filter, past that filter of, there's a lot of buzz globally, there's a lot of traded volume. We're a player, right? And I think the vast majority of Bitcoin treasury companies do not have that at all whatsoever. And there's really probably only 5, maybe 10 in the world that have that kind of, liquidity.
Yeah, and so my own journey in understanding that, I think the first time I heard it was Climb when he, so he's not invested anymore. We can talk about later people turning bearish, but the reason I'm bringing it up is I believe I heard it from him first on Metaplanet, saying how big the volume was, how important that was, and I didn't fully understand it. But without that, you explained it so well. It's without that, how are you gonna fundraise when mNAV is positive, and then the big players don't want to enter because they can't exit, and people with big money absolutely have to think about that. Which puts
and it's like, it's so path dependent, right? Like it's a bit of alchemy. Like how do you get to a position where you suddenly have a bunch of traded volume? There's no clear formula. There's nothing like, there's no boxes you can check to do it. It's a really organic binary thing, right? Like you either have excitement from an investor base or you don't, and it's hard to manufacture that. So yeah.
And just shout out to everyone in UK watching right now, or a part of like globally around the community. Like I really, the SWC community is special. Like it's the only one where I mean, I'm in Metaplanet as well, but it's the only one where I feel like I'm talking to some of the same people, like on X, where and some people putting in a lot of work of, trying to figure out how much you're racing with the ATM. I mean, the amount of work that goes into all of that, just really great community and fun as well all around.
And I have to compliment the Brits too on, it's been brutal for the last 3, even 4 months for every Bitcoin treasury company in the world. And sentiment in our Twitter community, which is the 3rd largest in the world, Strategy, Metaplanet, then Smarter Web, just over 4,500 active members of that community. But yeah, the sentiment has held up decently. It's extremely tough. It's a 150 vol stock, and the tide has gone out for this whole sector. It's brutal. But there's something about the Brits where it's in their blood, it's in their DNA to keep perspective and and tough it out and have conviction and resolve too. And I think that has been very cool to see show up in our community and the sentiment there. Like people understand that it's not always going to be roses, and this high volatility and this strategy comes with a lot of volatility, and that means some tough periods. But it has been very cool to see that it's part of the culture, it's part of the DNA to get on with it.
Look, the Brits are tough. They were occupied by Vikings 1,000 years ago. That's a little. And
is that where it comes from, Anders?
I don't know. I'm thinking that could be that. But also, and obviously, some of the Danes, they settled there. So we got some people with grit no, great people. And we're not getting political, but my thoughts and prayers with that beautiful nation. Further, I think it helps you, Jesse, that SWC went public with 2.5 Bitcoin with an IPO price at, what was it, 2.5, 2, 3, 4. What do you call them? Pennies?
Pence.
No, what?
Pence. Yeah.
Pence.
Yeah.
So it probably is easier to still have a smile on your face if you've done 20x than if you're down 40% from your entry. So, but that still plays in as an advantage for the community that you have people who can continue going without it being difficult because they're in the money very, very significantly. And that I think that actually is an asset for SWC. Earlier I spoke about, you may be one step further on the risk curve, but also argued that the upside, I think, is very attractive on SWC. And if I should try and define, well, where is that step? Why is there more risk? Right now, the only thing I can see is, well, the preferreds, they're ready to launch them. Everything is good to go in Japan. And the cost of doing that in UK means you need to and you want to accumulate more Bitcoin before you take that step. I think I can almost narrow it down to that's the only point on the risk curve that you're further out on. But I have no doubt that you'll get there. You are yielding. Very few companies are yielding, which means increasing sats per share, increasing Bitcoin per share in this environment. You are, and not many are. So
Yeah.
so
we've delivered 1.7% Bitcoin yield so far in Q4. So that's 3 weeks plus 1.7. So we've compounded Bitcoin ownership for our investors by 1.7% in the last 3 weeks, 300% in Q3, and yet we're currently priced at about 1x mNAV, and again that comes right back to that conundrum of like, how do you value a Bitcoin treasury company? Well, in my view, it's you value the assets they hold today in terms of Bitcoin per share, and then you need to price in some expectation of Bitcoin yield into the future, and that you can do that based on purely forward-looking things. But I think the most helpful thing is to look at execution to date. What's the most recent track record? And in this incredibly tough environment, the last few months, we've managed to keep that flywheel turning and have added 1.7% Bitcoin per share in the last 3 weeks, which has coincided with our mNAV being under 1 for a few days there, and we've still managed to deliver a positive Bitcoin yield. And I'm excited about what we're working on right now to continue delivering Bitcoin yield, even if our mNAV was under 1x.
Yeah. And the 308% you refer to in Q3, was that also the full inclusive of all warrants from pre-IPO and all of that? It is like...
Yes. Yeah. So if you exclude the warrants, I think our yield was 278% for the quarter. But if you add the warrants, it actually increases the yield, because that's how the math works out.
Okay. I'm going to go ahead and trust you on that one, because I don't want to do that right now. There was a great question earlier on. There's so many topics I want to cover. I hope you do have a little time today, Jesse, because we didn't even dig into when I had you on, I think for the first time during the summer when I was in Denmark. I think it was the only interview ever where we ended while I still had questions written down during our conversation that I didn't get to answer you or ask you. Let me just find. So I think there was an interesting one. We're talking about preferreds, and KH, I'm going to come back to your question. I think it's like more Bitcoin, and we'll take it later. I know you're patient. But this question, since we're talking, in the future, preferreds is something that SWC will likely engage in, or at least you're looking at it now. Do you have any thoughts on this stretch, stride, strive, strike?
Yeah, I agree. This person's very informed. Bitcoiners Hope knows what they're talking about here. I think that stretch is probably the most desirable product to get to, and I think Saylor's characterization of it as the iPhone moment for strategy is quite a good distillation of that. I haven't looked into this that much. I have done a bit of a dive into what's necessary to launch these things, and I don't know if I should. I think I'll stop there, because I don't want to share too much of my learnings on that. But there are other things that you need to consider about the order of introduction of these from a legal and regulatory point of view that may influence, what's the best order.
Right. And just for those that might be listening to YouTube in their pocket, just shout out to Bitcoin is Hope for that question. Like personally, I'm thinking, because I think it was True North that were talking about, well, if eventually Saylor and everyone else strategy could do, even weekly or daily payouts. And I think something like a daily payout of the interest rate and daily adjustment of the interest rate on the fixed income product, I think it would get some people excited just by, even though it ends up being the same, but just seeing cash trickling in on their account on a daily level, I think might get people a little bit excited about that. So we're going to talk about the mNAV tools at different levels when we get to it, but also, so right now you're around the mNAV 1. In fact, during the show, it's gone up from 106 to 107. Thank you very much. Let's give you the credit for that, sure. Jesse.
Yeah, I'll take it.
So I think a lot of us in the retail investing community had, started asking ourselves a lot of questions when this whole mNAV compression to around mNAV 1 happened. So one question is, let's say you at 1 and you're going to stay there for a while. Then I think it becomes a logical question. Okay, with the operations of the company that you already have running, I know you make websites, and I know that business because I was in it for 3 years back in the zeros for a Danish web hosting company sitting in Dubai. Will that cover the setup that SWC has now, including salary to Jesse, salary to the different people focused on this, so that investors can be, well, they're not going to run out of money, so I got time on my hand. Like, time is withers. Or are we looking at, well, we got 1.5 years of cash left, and then someone's got to go, or we're running out of money? And because that changed the whole dynamics. Like, will you be able to continue at mNAV 1? It won't happen, but in my opinion, but
yeah, I don't think we're concerned about that at all. A few things there, we have, our treasury stats for our Bitcoin treasury and the cash that we've set aside for imminently buying Bitcoin. We also have, treasury assets for running the business. It's a bit of a UK standard and a norm for, you have a certain amount of runway, which we have. And I will abstain from saying a specific number because we should keep it private, but we have quite a bit of runway we feel comfortable with. We also have, the ability to keep raising capital. And, over the most recent 2 weeks, a good chunk of which our mNAV was below 1. And we were running the ATM when it was accretive to shareholders, and raised 1.2 million pounds during, the worst conditions in the market that you could, ever imagine, really. She's steeply down for day after day in what may have been a capitulation bottom. And we were still able to raise a good chunk of capital during, a 2-week period. And as a business, we also have the web design business that helps cover a large chunk, is kind of how we've landed on describing it. Because we, again, don't want to say a specific percentage of operating costs that covers, because it obviously can and will vary, as our expenses change and as revenue changes. But a large chunk is covered by the web design business, so we have that as well. And altogether, that puts us in a different place, I think, than most Bitcoin treasury companies. We have a profitable operating business. For one, most Bitcoin treasury companies don't have that. And in addition, that liquidity is once again important here, because you can raise capital because of the amount of volume traded in the market. And if you don't have that liquidity, you're not able to raise capital and further cover your costs. The point here being that we've raised 200 million pounds of capital in 6 months over 200 million pounds. And what's the amount that we need to fully cover our operating expenses on top of the profits that we get from the web design business? Not that much, right? And so it's pretty easy to fill that gap with a tiny portion of capital raised as needed. Yeah.
So would it be fair to summarize your answer by saying, you may not necessarily have operating profits that cover the setup. However, you have a solid amount of cash, and you trust your ability for mNAV to at least swing above 1, so you accretively can raise more cash. So there's nothing to worry about.
Yeah.
Yeah.
That's right. And in this, we've really just been talking about the ATM style instrument. On top of that, there's every other form of fundraising that we can also do. Yeah.
Yeah. All right. So let's have a look or chat about the different mNAV tools. Very excited to hear your thoughts, Jesse. And I guess we should start from the bottom, because the top is very easy. If the mNAV is above 1, you are, and a shout out to Hermes Lux on X, which I think has a great perspective on it. We used to looking at this industry as investors thinking like mNAV's got to be 3. That's much better than 2. And, then it's like really accretive. But he pointed out the way he set it up with the different levels of, even when the mNAV is only 1.11, for instance, you're essentially buying Bitcoin at 10% discount. So it's not like, oh, it's not working now. No, you have access to buying Bitcoin at a discount as long as it's above 1, and then minus the cost, the commission of running the ATM. But I think that's like a really nice way of looking at it. So above 1 or significantly is obviously very positive. If we start with what can you do if you are below, say, 0.9, and what are you willing to do? And personally, I'm a big proponent of something that is highly controversial, which is selling Bitcoin and buying stock. But let's hear it from you, your thoughts.
Yeah, we are not proponents of selling Bitcoin to buy stock. I think that is a reasonable short-term strategy that sets you back in your long-term goals. So if you can solve it in any other way, I think that doesn't harm your long-term goals. And by that I mean, the whole point here is to grow the largest Bitcoin balance sheet possible, so that you can be, more creditworthy and have more successful preferred equity instruments. Things we are, open to doing is we haven't looked into this yet, but we theoretically like the idea of, if you're under 1x mNAV for a period of time, you can sell options directly in the company and use those proceeds to, in the most accretive way possible, which that could be, buying the stock itself. So in that way you're generating capital to then, do buybacks without having sold any of the Bitcoin in your treasury. In theory, open to that. Saylor has said that they would do that, or consider that for strategy. Something that we're more focused on, that I like a lot better, that I can't give too many specifics about, but it's possible to raise capital with a premium, to have capital structures that involve a conversion premium, where that if you depending on how you set it up, you can be at a 0.9 mNAV have, raise capital under a certain structure that involves a conversion premium, and then the effective mNAV of that transaction ends up being above 1x mNAV. So even though you're under 1x mNAV, you create a transaction where the result of it is being above 1x mNAV, and then the market has to process that and digest that reality that you're accretive even if you're under 1x mNAV. So what should you trade at then? Maybe not 0.9. Anyway, I'm excited about those possibilities. I think that those are well suited to the company and what we've already done, and our current size as well, and all the other sort of important inputs that make that work. We happen to have, so I think it lines up nicely for us, and I'm excited about exploring those.
Excellent. What you're referring to there, and I know that you and Andrew are cooking on something, and because you're publicly traded, you can't say too much. You could get in legal trouble. I think that's what Sepp was referring to. But also, if you're inventing something cutting edge, you may want to use it first before the world sees it, and others do the same.
Yeah, and I don't think anything here is, this is all theoretical of like, these are things that are available to everybody. And yeah, and there's nothing, we haven't like created anything groundbreaking here. But I am excited about our focus at the moment. And I think that, with tinkering just a little bit with what's out there already, we have an attractive path forward.
Excellent. Happy to hear, and that's what we've been picking up, I think, the whole time since this became a relevant topic. So the thing you're describing there or talking about, is that leverage, like as in loans that then later convert? Because we know the term convert from convertible bonds, be it fiat denominated or the smarter convert, Bitcoin denominated, together with Tobam from France. Is it leverage in terms of loans that convert, or are we talking, like, what can you say?
Well, yeah, what can I say? Like we did, you brought up Tobam, and we did a capital raise with them that had a very small conversion premium built into that structure. So, like that was a Bitcoin denominated convertible note, our smarter convert, that I think is a really cool vehicle. And, hopefully we, can continue to explore that. There are other instruments too that involve conversions, like warrants, and other instruments too. So it's a whole category, of capital raising instruments that involve some sort of option value.
Gotcha. Makes sense. So bottom line, go ahead.
Right. And then with regard to your leverage question, like smarter convert is technically debt, but it really behaves a lot like equity. So it kind of depends on, how you want to think about, that, for example. And in terms of traditional leverage, we're open to it. We'll see if it makes sense in the market conditions and the terms available to us. It is personally, I think, slightly less compelling than the kind of vague possibilities that we've talked about very recently here. But that's kind of our current thinking on that point. But we're open to it. We'll see.
Right. And it's only 12 months ago that the entire market, myself included, everyone were super excited about Strategies convertible fiat bonds. And that was like that was the whole business model, was we lever up, Bitcoin moves up, we move up faster. Like that was the whole thing. And then how far we've come in 12 months that doesn't even seem that attractive anymore compared to the other tools now available. There's another aspect there I'm thinking, Jesse, is you know, I think there's a lot of good reasons we could argue that the 4-year cycle may not continue, but I will say till this date it is intact. Except if we look at Bitcoin in gold terms, we're not even near the old top compared to gold, which is a much better denominator than the dollar or the pound, because they just dilute all the time. They're useless as counting tools, really. Then we're supposed to, like, I think the previous top is $169,000 per Bitcoin, and we're supposed to hit that like a year before we go to the actual blow off top, right? So there's a lot of great arguments that I mean, it does not look like a bull run at all. That's something we'll get to as well. KH had that question on that, what's happening with the Bitcoin price. But if the 4-year cycle for some reason would give us a bear market next year, which is hard to see right now, but then taking on leverage now would essentially be borrowing money to buy the top of Bitcoin, which might not look so well if the price went down, and then all of a sudden you have a high percentage of debt and you bought the top and limit yourself in future finance.
In terms of leverage, like I think, Metaplanet's a great example. They've sort of averaged 10 to 15% leverage over their history, but they've recently quite deliberately decreased it as they got ready for the next stage of their journey. We are not at that stage, but we are, we're sort of view ourselves at a transition point into kind of the next stage of growth, or as a business. And one thing that, having leverage on your balance sheet makes it more difficult to raise capital in general. And people have to weigh that reality with the benefit of leverage, juicing your returns, assuming things go well. And that's a big part of what we're sort of, it's a subjective element that we're considering too, and the timing of leverage with regard to that.
That's such a great point. I didn't even realize or think about that connection, because I was thinking, well, if you guys have said that preferred shares probably wouldn't make sense until you have 10,000 Bitcoin, which may be a little while, then why not just take on some other debt? But if that affects the attractiveness of your stock when you want to raise more institutional capital at an uplisting to London Stock Exchange, which may or may not happen this year, we all are rooting for it. Then it makes sense that you want to stay as with as little debt and leverage as possible.
Right, and that may be, the outcome of that, and it may. It may turn out that it's okay to have X amount, but not, 3X. So, we're as always constantly open to new information and making strategic choices as information shifts.
Yeah. Okay. I can take that off as well. You were talking about your yielding early in the conversation here. Actually, why don't we go to KH question? Let me just bring up Christina's question, because we did touch a little bit upon it now, and feel bad about keep waiting to answer the question. But Christina asked, or she wrote, I would love to hear Jesse's thought on BTC here. One, is he surprised at BTC's price action, that it's not higher here? Two, what does he think drives the next leg higher in BTC?
Yeah, it's a fun question. It's sort of one I've been digging into the last few days in particular. I have also had the view that, 4-year cycles are intact until disproven, right? Because I don't want to say this time is different, right? Yeah, I think that the correct default is this time is not different. But the closer we get to the end of the year, without a blow off top taking shape, the more it is different from prior cycles, right? Like, I think the sort of consensus view is that Q4 Bitcoin rips and everybody tries to sell the top, and of course that's not how it's playing out, because I think everybody was expecting that. There's another bit in here too of I think a lot of early Bitcoiners sort of have the view of, okay, I'm going to count X number of days. I off the top of my head, like 510 days, I might be off, plus or minus 50 there. 510 days post halving has historically been roughly the top. So I'm going to sell there. And I think that was the local top that we just had, was that exact timing.
Yep.
And my view on that is that it could be that a lot of whales are sticking to their plan, and that has precipitated a local top here. And at the same time, there's a lot of institutions and TradFi that are happy to buy those coins and have been doing that. And I don't see that stopping, and I don't see the sort of mania and euphoria that suggests to me that Bitcoin has topped. In fact, I see the opposite, right? I just dug into, like, what's the current state of M2 money supply globally, and I put out a tweet on this yesterday that went pretty viral, and that the money printer is running hotter now than at any time since COVID, and people aren't talking about that. So 6 months ago, global M2 was $129 trillion, and right now it's $137 trillion. So we've added 12% annualized growth in the money supply over the last 6 months. And that has been, I think, part of why gold has been ripping. In 2020, that printing started in March with the COVID response, and it took until Q4 for Bitcoin to then 6x over the next 4 to 5 months. 6x rally. But that was quite a bit delayed from the money printing that started in March. Gold tends to sniff out money printing faster, and that may be what's happened here. So so there's a world where Bitcoin has been just coiling, and absorbing the selling of whales who are playing the 4-year cycle game, because that's what they've known for 16 years. And that will end, and the conditions that are, coiling the spring and suggest that Bitcoin should go much higher will not end. And I think that's kind of becoming my base case scenario. But again, like, it's also possible that everybody's wrong. Bitcoin has a way of doing that. It's possible that I'm very, very wrong. It's possible that the top is in and we're in for a super painful bear market. But then again, like, our prior peak was $70,000 4 years ago. So, like, what is a bear market? And we've had significant corrections, and it's 3 to 9 month sideways consolidation periods over the last 2.5 years. Several of them. And, what does a bear market look like if you've been digesting, Bitcoin's price growth with these long consolidation periods along the way, and you don't have a blow off top, like you don't have an 80% drawdown if you don't have those other things happen. So, where does that leave you? I think basically I'm bullish. I'm always bullish on Bitcoin. I do have the problem that I'm typically bullish at the top, but
Me too.
I'm smart enough to remain bullish at the bottoms as well. I think being bullish on Bitcoin is, if you're going to be wrong, be bullish. Be bullish and wrong. Anyway, I think that when you zoom out and you look at all the metrics that matter historically to Bitcoin, it seems to add up to me to a coiled spring that just hasn't popped off yet.
I agree, and I must say I don't recall since coming across Bitcoin that I haven't been bullish on Bitcoin one single day. I think I'm always bullish, which can be dangerous, but I think for a lot of good reasons. I mean, we Bitcoin I believe in my lifetime, given the opportunity, I will see $20 million per Bitcoin, and I'm not a spring chicken, so we're talking decades. We're not talking another century here. So yeah, I agree. Actually, you could argue that the 4-year cycle is already broken because we are in the 4th year and we haven't even reclaimed the all-time high. That always happened in the 3rd year.
It's a great point. I agree. I think, I don't want it to be my base case, but increasingly it looks likely that the maturation of this asset and Bitcoin treasury companies are a force that are overpowering the diminishing impact of the halvings, and that balance may have tipped, and the whales that sold the 510-day local top here may be playing the old playbook and are wrong finally, and the new paradigm may be here. See, I realize how dangerous those phrases are, but that's why I must continue to believe that the 4-year cycle is the default. But increasingly, it looks likely that things are just different, and we're in like a sort of structured institutional bid, as opposed to the retail-driven, parabolic advance that we had in all prior bull markets for Bitcoin.
Yeah. And I just personally don't want to, for a second time in a row, say it's a super cycle. There's no bear. Like in 21, I'm like, no, this is, and even in the beginning of 22, no, we'll be back. We're going higher. There's no reason. But there was a 4-year cycle. So concur to everything you say, Jesse.
And they could both exist. Like I think the 4-year cycle exists to some extent, and this other, indifferent to cyclicality reality also exists. And the question is, like, what's their relative size right now? Like, does one dwarf the other? Are they kind of at parity, and we have like a weird half cycle, half amplitude cycle, or or has one already won out over the other?
Right. It will be, I mean, it's so interesting. It's so interesting to see this quarter and next quarter. I would say, with an argument from before, it does not look like a cycle anymore. But especially if we set a new Bitcoin price next year that is higher than whatever is going to be the high of Q4 this year, that would also show it's broken. But we're 50%. We're supposed to go up 50. Bitcoin should be up 50% to even reach the all-time high measured in Bitcoin. So
in gold, yeah.
In gold, yeah. And there's no exuberance. In fact, let me go back to KH's question. And I don't know if it was there or somewhere else. There was actually a reply to your post, I think, on X, when you retweeted that we were going live, about like, why is the price this low of Bitcoin? I spoke to Grain of Salt Saturday in Santa Monica and others that are saying, well, like the derivatives institutions can suppress the price of Bitcoin, or maybe that's the reason we haven't gone higher yet. Like, what is the reason we're not? Bitcoin is not.
Yeah, I don't know. I mean, yeah, I don't think anybody really knows. It is very possible that derivative products sort of take out some of the volatility, because it create the
Ah,
tools by which you can punish people who are offsides, like in 2017, in that bull market into Q4, there literally weren't any derivatives that you could use to short Bitcoin. So it was just a long only market, and retail, and piled into Coinbase, and bought whatever they could at whatever price they could, and it went up. Um, and we live in a different time now. I think the really big force that's kind of hard to quantify is like half of all the supply in Bitcoin was mined in the first 4 years, right? So like mined by before the bull market in 2013 really took off. So early whales have a ton of supply, and if you were an early whale who accumulated when Bitcoin was under $10, you only ever dreamed of $100,000 per Bitcoin. And I think there's a lot of overhang, a lot of supply that we need to chew through from billionaire early Bitcoiners that we've never heard of because they stay private, who are selling. And in fact, yesterday, Andy Edstrom, or 2 days ago, I was talking to Andy Edstrom, and he pointed out that I didn't know this, but that big sale via Galaxy, that 80,000 Bitcoin sale a while back, the stated reason for the sale was "quote unquote" estate planning. And that may just be a BS cover all label for why they were dumping a ton of coins
mhm.
all at once. But it could be real. Like maybe that person has 200,000 Bitcoin, and it was time to sell some to lock in billionaire status for themselves and their family forever. Um, and I think that's the reality of what the market has to chew through. There are literally early Bitcoiners who one just went to space, and one is currently building their own
To the
personal space
moon.
station. Yeah, and there's another guy building his own space station right now, like a private space station. So that's the kind of wealth we're talking about here, and those coins just have to change hands to people who are starting their journey now, because there's a lot of early Bitcoin whales where $100,000 per Bitcoin was the end of their journey. And that's the process of a startup store of value asset monetizing over time. And there's legs in this race, and you have to pass the baton to fresh legs. And it's hard to quantify how much of that there is out there, but I think that's why we've been stuck at 100,000 more or less for a year.
No, that makes a lot of sense. And because the mining supply has become so small, and as you're saying, it's less and less meaningful, which is part of like the main feature, or one of the big features of Bitcoin. It really is supply from people that are now able to afford private space stations that is hitting the market. And it makes a lot of sense. So I'm optimistic for next year, but let's just say it's intact, even though it's already broken, because we haven't even reclaimed the measured in gold all-time high, which we should have done last year. So things are looking bullish also for next year. Let's see. So if we should just recap a little bit here, what was very important for me coming into this is hearing your thoughts about different tools at different mNAV levels. When we get to 1, when we get below 1, to get rid of the worry of, well, they're now going to be stuck at 1, which I never felt. I've stayed bullish throughout this, thinking, well, it's just a matter of time before we get back. And the answers you're giving me, even though you can't be very specific on things that kind of has to surprise market in a positive way, is tools are available. There's a last resort even buying stock with Bitcoin sold, but there's other ways to raise monies that you have. And you, of course, you have to say this, but you have no worry that you can raise funds and buy Bitcoin or buy stock at whatever at different mNAV levels. So that's not a worry, and I share that. But a lot of people, previous bulls, have becomes either bears or just uncertain and have left this space, and it never even for 1 second was something that that I thought made sense. Like I'm still a very strong bull in treasuries.
Yeah. No, just what I would add to that is, you and I have been through some cycles, and I think you were in altcoins too in like 2017 or.
Wait, this is my bad.
Battery's gonna die.
So I'm sorry, Jesse. So like this phone, even though I said not to connect to my computer, it still meant a spam call meant I couldn't hear you. Yes,
no
if
worries.
you can go back, like you and I have both seen.
Yeah, we've seen a few
cycles and bear markets, and we've been beaten up.
And I think altcoins. I did altcoins in 2017. I think you might have lived through that. Oh no! Wow.
Yeah. No. I saw the altcoins, but I never bought.
Sure.
Some of the first content I consumed was very maxi, like Tonebase and and funny enough, World Crypto Network, but they were maxis as well.
That's
so
good.
yeah, I just didn't touch it.
Yeah, the rare exception. Well, I went through the way of pain, and that meant that I had a very severe drawdown in 2018. Only to then realize what I was wrong about, what I was missing, that it's all about Bitcoin, that Bitcoin already won, that it's a network effect thing. This is a protocol standard. It's not about technology, all these things. And then at that point, I realized that I had been holding these assets that were based purely on perception, right? Like altcoins their value is purely perception, and there is no fundamental value in them. And it's been very interesting that Bitcoin treasury companies have been trading a lot like altcoins, but they are very different because at their core, a Bitcoin treasury company is about accumulating Bitcoin, which is the best asset in the world. And that's very real. and growing Bitcoin per share over time is very real and very different from altcoins, which are, purely based on perception. So in that sense, like it's amazing. These Bitcoin treasury companies trade very high vol. We have 150 vol. Bitcoin itself is like 35 to 40 vol. So it's Bitcoin's volatility squared, and that trades like altcoins, except that you have this reality that there's a Bitcoin NAV floor value, quote unquote floor value, that a fundamental floor that rises over time if you're successfully deploying the strategy of growing Bitcoin per share over time. That turns into a floor that rises in terms of the fundamental value of the company, and per share. That's just so different. And so it's a little surprising to me to see people shaken out by 150 vol assets. That manifests as that feels like Bitcoin in 2013. It sort of trades like that, and the swings of sentiment are extreme, absolute euphoria, and then total despair and disheartened disillusionment. A lot of disses, and that can shake people out. That's what that does, right? Like that extent of pain causes people to capitulate and lose conviction, and then capitulate and exit the trade, which I understand in altcoin world, right? Because you become disabused of your prior delusion that these assets were going to be the new global standard in money because of their technology. That's wrong. But with Bitcoin treasury companies, you have this fundamental value that increases over time, and there's a disconnect. These things trade like altcoins; they trade based on sentiment, but they have this fundamental value, and that just creates opportunity, I think, for people who have experienced crypto's degree of volatility in the past, specifically in bear markets, and are not shaken out of their conviction because they've they've felt that emotional landscape before, and they've seen how that eventually turns, the pendulum swings back, and things recover. When it's the first time you're going through that emotional landscape, you do not believe that it will ever recover because it's so all encompassing, and that's because people who are selling and in part causing this thing to these assets to sell to irrational levels are people who it's their first time in an asset like this, and they lose conviction and they make an irrational decision to sell at a point where there's actually greater opportunity to keep holding and not sell. So those are some of my thoughts on all that. It's fascinating to see. It's a little bit tragic because I think it means a lot of people who have been holding Bitcoin Treasury Company stock are new to crypto and haven't been here before in a high vol crypto asset, and may have made irrational decisions on the way, at the bottom.
Yeah, I agree, and I think we better off for having seen a recovery from the 18 drop in 19, 20, 21, and from the 22 drop in 23, 24, and 25. So that helps, and people in general has to be careful of not letting fear and greed be the decisive factors in their financial decisions, but usually they are. We will wrap up soon. First, I just want to, because we spoke about yield. I did a post yesterday. So what I will be focused on here, and let me just see if I can make that a little bit bigger there. What I'll be very focused on is the yield of these companies, SWC and Orange and MSGR and MetaPlanet and H100 and Capital B. And I will be posting on a regular basis throughout the quarter where you currently stand. The only reason, look, it's not because I'm advised at Orange, I put them ahead of you. It's just their announcement was before yours 1.7 in terms of the latest buy. So I have to presume they're a few days further into the next, but you're actually neck on neck. And I think it's important for people to understand that, I just want to highlight that this is in a low compressed mNAV environment. And if you can do almost 1% yield weekly or 0.5% over a year even, that's a lot. And then you add in a couple of good years and a bull market and Bitcoin goes up. Like it's just, it's a no-brainer in my opinion. And if we just and then I said, if anything, my expectations for who will do best in the quarter is SWC and Orange. And I would say, especially if that uplisting kicks in, I think that could be pretty wild for LSE to London Stock Exchange. And then G Money, I guess, who I think will do the best stock price performance. My guess is, and I really don't know, and I could be very, very wrong, I'm thinking SWC, probably followed by Orange, simply because of you already, wait, let me just get this gone again or remove them. Just because you're already yielding well in this environment, execution has been so beautiful to see in SWC. And I think the catalyst of a potential London Stock Exchange uplisting is just massive with the unlocks of institutional capital. So
I appreciate that view. Cautiously optimistic that we will have a good quarter. And, you know, I think, I guess in conclusion here, I think that this sort of bear market for Bitcoin treasury companies has been a real test that has stopped the flywheels of many Bitcoin treasury companies. Our flywheel is still going, plus 1.7% in the first 3 weeks of Q4. We hope to add to that, and, you know, not just this quarter, but subsequent quarters, and keep building our Bitcoin treasury as the leader in the UK, and keep following that Metaplanet trajectory. And, you know, even though it's been absolutely brutal on the share price and for, you know, every Bitcoin treasury company, we, I think, are emerging with greater relative strength because there's been a certain consolidation in the UK to, you know, okay, there have been 25 Bitcoin treasury companies that popped up. Many of them never got off the ground. Some of them, their flywheels have stopped. Who's the leader? And there's been a certain consolidation into smarter web that leaves us in a strong position to, you know, having survived the tide going out. We'll see what happens if the tide comes back in.
Thank you very much, Jesse, for coming on here. I'm looking forward to having you on again, and also having Andrew on again on another Wednesday. Just a reminder that nothing we say here is financial advice. It's just financial entertainment / maybe information at the best, or education. So, but if you do like the financial entertainment, feel free to hit that like button and subscribe, etc. Follow on X if you like that. And thank you to the more than 500 live viewers currently. I think
thanks everybody.
Yeah. So I'm only getting on the screen. That's something Restream started with 52 from YouTube, but it's 500 on X alone, or right about that. So thank you very much, everyone, for tuning in. And especially to you, Jesse. You've answered my questions. I remain bullish at mNAV tools being available at all levels, and we're going higher, in my opinion. So.
Hopefully, and thanks for having me on. We look forward to doing this again in a few weeks.
All right, perfect. All right, thank you so much, everyone. Thanks, Jesse. See you on the next one, which tomorrow is H100 happy hour.